Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 4:30 in New York. It is Monday, January 15th, 2018, and this is the Daily Report for Gold and Silver. Shortened trading day in observance of Martin Luther King Day, with equities being closed totally except for futures. That didn't stop the dollar from falling and from the precious metals rising. Gold closing up $5.60 to close at $13.40.50. Silver also showing a nice ascent, up 22 cents at $17.37, and that's all in light of the dollar breaking below 91, closing at 90.73. As I said, equities as a whole were closed, but futures are up substantially, with the Dow up, I believe, over 100 points in the futures markets. Lastly, Bitcoin trading higher today, $14,040 CBOE and $13,895 when we look at the Chicago Mercantile Exchange contract. Traders, although U.S. equities are closed for the day in observance of Martin Luther King Day, gold and silver are not. They do have shortened trading times today, but nonetheless, they are trading higher and showing substantial gains on the day. Gold futures basis the February's contract is currently trading at $13.40.50, putting it up about $5.60. You can see that right here on this single bar chart. What I find most interesting is if we look at this 23% retracement, draw a line across, we can see that over last week's trading activity, there were certainly headwinds and real resistance at this particular price point. In fact, it was the first time since this market began to rally that we actually saw some sideways movement. We talked about this last week, and it was our belief then that what we were witnessing was gold pricing forming a base, which in fact it had. And then we saw a pretty sizable breakout occur just the other day. And then, of course, Sunday's trading going into Monday here took that up a little bit higher. And now we are certainly within striking distance of last year's record high, which sits at about 1362. It really depends upon the momentum or strength of the trend. And to really look at that in a more detailed manner, we want to look at a Japanese average chart or a Heikin Ashi chart. However, before we do that, I draw your attention to the bottom of the screen where we are looking at the MACD. Simply put, the moving average, convergence, divergence. And what we are seeing is they are still pretty wide apart, even though they attempted to narrow. You can see that at this point, the divergence is widening. In other words, the space between these two moving averages is getting larger. Now, traders, I have just converted the bar chart into a Heikin Ashi or a daily Japanese average chart. And the key difference between the average chart and a candlestick chart is how the open is created. On an average chart, simply put, the open is the midpoint of the prior candle. And what we look for in this type of chart more than anything else is body size and whether or not on a bullish uptrend there is a bottom tail or lack of bottom tail. Because the absence of a tail on the bottom is simply saying that at no point during the trading day did prices move in or below the midpoint of the prior candle. And you can see that all the way up until it reaches these sets of candles, which is where the market consolidated. If you notice, you get the emergence of lower wicks, and you actually got a red candle followed by a doji. In other words, a pivotal point that could indicate a key reversal, but in this case shows us that we're looking at consolidation in the market. Now, over the last couple of trading days, you can see that the body size has grown tremendously when you compare it to the congestion area as well as the upside candles that occurred just prior to that. So traders, at this point, we've got sizable profits on our current trade. If you recall, we entered the market roughly at $12.65. we have been trailing our stops up tighter and most recently have trailed our stops to just below 1321. Traders, therefore, my recommendation is to maintain our current long, which resides at 1265, and to maintain our current stop just below 1321. Marked to market on this particular trade, we now have $75 worth of profits, and it's going to be our jobs by moving stops up to attempt to capture as much of that move as we can. And traders, as you know, we have talked about the fact that there has been an absolute disconnect recently between silver and gold, in which silver was under more pressure than gold, actually trading lower as gold moved higher. And that occurred right here. Now, we have seen the market break out and break to the upside. We've got a gap in the market. It's not a true gap because we do have this upper wick, but nonetheless, it does appear as though silver could be headed to about 1750, and we will look for an appropriate place to reestablish a position should that be warranted. And traders, lastly, I do want to take a look at Bitcoin futures. Very interesting action as Bitcoin futures opened up. We had erratic and extreme volatility, moving up 5,000 and down 10,000 through a range. But we also noticed that recently we have finally seen this market actually begin to consolidate, breaking down to these lows at 13,000 per Bitcoin, and now it appears it has formed a base here and is now tracking off of that price point, now tracking at about $14,000 per Bitcoin. I think we could see this market begin to track higher at this point. The key is whether or not there's going to be enough volume in these futures contracts to warrant us putting on a trade. Traders, even with a shortened day, we have seen gold continue to rise, now breaking substantially above former resistance, which is now support at approximately 1324. We've got stops just below 1321. And as you saw from the Heikin Ashi charts that we looked at during the technical studies, I believe there is a lot of momentum and strength left in this trend, enough to at least challenge the record high of last year at 1363. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review.